Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 18th of December 2025. I'm Mark Gardner. Oracle continues to pull the rug underneath AI. That's our fourth session in a row. We're down now, and safe havens are starting to fly as well. Silver back at record highs, platinum at 15-year highs, and we've had rallies in most of the other commodities as well. ASX was, broadly positive yesterday. Didn't really fall away overnight. We've got the Dow, S&P, Nasdaq, and things starting to show strong sell signals on the hourly. The Nasdaq and the Russell, particularly, showing strong sells now on the daily. We've broken some pretty critical moving averages on the downside as well. As you can see here, really, it's the AI part of the heat map that's been really belted overall. Although there was some knock-on effects from the unemployment report being pretty poor yesterday. So they basically released two of those unemployment numbers. October was down, as we suspected. We did those sort of back of the napkin numbers. And saw all those layoffs in October, and then, the unemployment rate back up at 4.6% as well. They did add 64,000 jobs in November, supposedly. But we were down 105,000 in October. I mean, really, God knows where they are. I mean, these things were getting revised as it was prior anyway. So NVIDIA down 3.8, Broadcom down 4.4, Oracle down 5, Google down 3. Caterpillar, one of the economic sort of bellwethers as it's generally regarded, was down about 5% as well. After the bell, we did have Micron report earnings, and it absolutely smashed it out of the park. Revenue above 8, expected at 6. Bill, it's up 8% in the aftermarket. Was down 2 or 3% leading into it, but real reversal here. We had some of the energy names head higher, ExxonMobil, Chevron, etc., up a few percent. Overall, has sort of that situation between the US and Venezuela keeps unfolding as Trump's basically has ordered a total and complete blockade of all oil tankers, in addition to existing sanctions. And he's on alleged theft of US assets, terrorism, and drug and human trafficking, which is just code for, this is the new weapons of mass destruction from back in the last time we went into Iraq, I believe. And it seems to be unfolding in that negative fashion. And I think that's why we're getting that sort of safe haven bid in the commodities, particularly. Platinum now, the new golden child, up around, getting close to 2,000, up 15% for the week. Silver back at record highs, up 7% for the week. Gold just keeps grinding higher as well. Copper actually doing pretty well to hang in there, given it's a cyclical mineral. Uranium's pulled back a touch, down around about 10% for the week. And then Bitcoin is struggling a little bit as well. You just don't know what day, Bitcoin's going to classify itself as safe haven or risk asset or whatever. So overall, said fairly confusing times in thin markets, and we don't really expect to see, too much. Too much makes sense, really, I would say, until Christmas. I think there could be some pretty sharp moves either way. It could bounce back. It could get hit even further. 4 days in a row down for the S&P and the Nasdaq, albeit very small, is the first time I can remember it's done that. We do have some earnings tomorrow with Nike. And then we've got FedEx as well. We've got a raft of monetary policy decisions. The ECB particularly will be tonight. And then we've got CPI tonight as well, early hours of tomorrow morning. And you got Fed, Bostic and Williams speaking. And then the BOJ on Fridays. So realistically, we're, where there's still a fair bit of stuff to come out here. Any hit to interest rate expectations is really going to hurt. Is really going to hurt this market further, and I'm overall definitely sort of a time to be cautious, I would imagine, given what's going on in the world and the fact that Oracle really is like what's been holding us up for the last 12 months basically. Oracle's really pulling the rug from underneath, and without that support of that AI sector and that thematic, the market hasn't actually been that going that well this year, outside of those names. And if those names are not holding the market up, then we could start to see that a bit of a significant turn lower. I think the broader market, I mean, as I said, we're already there, and I'd be surprised to see it get smashed too hard. And we'll be looking at, I think there's today on the Aussie market particularly, the SPI was only down about 0.16 when I checked around about an hour ago. ANZ and Elders are holding annual general meetings today. New Zealand's got some small data. Netwealth's agreed to pay over 100 million in compensation to more than 1,000 Australians who invested in that First Guardian Master Fund. And has admitted some fault there, which is good news for those guys. I would imagine the material sector sort of tends to hold things up here as it stands, and maybe the energy sector just to a certain extent, but the rest of the market's going to be pretty poor today, I would imagine. Now, if you want our 2026 market outlook, go to mpcmarkets.com.au/MPC-markets-2026-outlook. Pretty good accuracy rate last year, this year, 11 out of 14 were correct. You go and sign up at that page, and then we will send you out the outlook for this year. It's about 40 pages, much more in depth than last year. We've got about 5 really solid themes for next year that we're looking to invest in over the course of 12 months, and there'll be a webinar on the 15th of January as well, with some more in detail stock picks, etc. So if you want to know more, follow us on at MPC Markets on Spotify, YouTube, Apple Podcasts, or if you want to have a look at our new platform and get a 1-month free trial, go to mpcmarkets.com.au/mosaic and sign up. Get all of our recommendations and all of our content for 1 month, normally worth around about $150 to $200 a month overall, and that covers US and ASX stocks. So thanks for joining this morning. We will speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.